Today, I'm going to show you how to use AI to pick stocks. Not theory, not hype, not shortcuts, but a real way to use artificial intelligence, prompts, and discipline to find stocks that can beat the market. Stay with me until the very end of this video, because the last section may change the way you think about investing forever. I'm Leo, the Millionaire Grandpa. I've lived through crashes, bubbles, booms, and miracles. I've made money, I've lost money, and I've learned that the market doesn't reward excitement, it rewards preparation. And today, preparation means understanding AI as a tool. Let me tell you why this matters. Over the last 100 years, the stock market, the S&P 500, has returned about 10% per year on average. And that's the benchmark. That's the mountain everyone is trying to climb. But here's the truth most people don't want to face. The majority of investors underperform that index. Not because they're stupid, because emotion beats discipline and noise beats clarity. Friends, I'll be honest, I lost a lot of money early. In the 1980s, I bought a sure thing because I liked the salesman's suit. I watched a 401k shrink and I felt stupid. That shame pushed me to study markets like they were a language. Price, volume, story. Decades later, after a second career and some smart bets, I realized the real edge wasn't knowing one hot tip. It was creating systems that reduced emotion and amplified signal. That's where AI stock picking comes in. King Solomon says in Proverbs, "The simple believe anything, but the prudent give thought to their steps." AI doesn't make you rich. Thinking clearly does. AI simply gives the prudent better tools. Now listen carefully. This conversation has 3 acts, and I'm doing this on purpose to keep you with me. In the first act, I'll show you why traditional stock picking fails. In the second act, I'll walk you through a practical AI stock picking framework. In the third act, I'll give you the most powerful prompt and mindset you can use starting today. Each act builds on the last. Don't skip ahead. Stay with me. When I was young, I picked stocks with my gut. I listened to friends, brokers, headlines. I remember buying a sure thing because everyone was talking about it. 6 months later, it was down 40%. I felt embarrassed, angry, small. That pain stayed with me. And pain, if you listen to it, can teach you. Years later, I learned something that changed my life. The best investors don't predict, they measure. Warren Buffett once said, "Risk comes from not knowing what you're doing." AI doesn't remove risk, it removes blindness. So what is AI stock picking, really? It's not a robot whispering stock tips. It's a system, and every good system has 3 parts: data, decision rules, and discipline. Remember that. Data, rules, discipline. Let's talk about data first. Humans can look at a few charts. AI can look at thousands of relationships at once. Price trends, volume changes, earnings growth, margin expansion, sentiment shifts, insider activity, even how often a company is mentioned online. AI doesn't get tired, it doesn't get scared, it doesn't fall in love with the stock. But here's the first hard truth. More data is not better data. Bad data produces confident lies. Good AI investing starts with clean, relevant information, price history, fundamental trends, 1 or 2 alternative signals. That's enough. Now the second part, decision rules. This is where most people fail. They let AI talk instead of asking the right questions. And listen to me closely now. because this is one of the most important moments in this video. It's all about the prompt. The quality of your AI results depends on the quality of your question. If you ask, what stocks will go up, you'll get nonsense. If you ask with structure, you get insight. Here's an example of a powerful prompt. Write this down. Give me a list of 15 high-return stocks that have outperformed the market over the past 10 years. Rank them by total return and consistency. Include their revenue growth, earnings growth, price momentum, and volatility. Then, using the data, identify the top 5 stocks to pick based on fundamentals and a value investing mathematical evaluation. That prompt alone changes everything. Why? Because you are anchoring the AI in facts, time frames, and comparison to the market. You are forcing discipline. Over the last 5 years, some stocks didn't just beat the market, they destroyed it. Stocks like Nvidia returned several 100%, while the S&P 500 returned far less. That didn't happen by luck. It happened because fundamentals, momentum, and demand aligned. AI can spot those alignments faster than humans, if you ask correctly. Now let's slow down, because speed without understanding is dangerous. Here's the practical framework I use, and I want you to hear it in thirds. First, signal creation. Second, confirmation. Third, risk control. Signal creation means identifying candidates. AI scans thousands of stocks and looks for patterns, accelerating revenue, rising margins, strong relative strength, improving sentiment, not stories. Signals. Confirmation means you don't trust one signal. You combine at least 3. Price trend, fundamental improvement, market sentiment. When 2 out of 3 agree, you pay attention. When all 3 align, you lean in. Then comes the most important part, risk control. This is where Grandpa saves you money. Never bet big on one idea. Never assume the model is right. Limit each position. Set exit rules. Protect capital like it's oxygen, because it is. I once ignored this rule. I trusted a model too much. It worked beautifully until it didn't. One market shock erased months of gains. I remember sitting alone, staring at the screen, realizing the model wasn't wrong. My discipline was. 5 years ago, I trusted a flashy quant report that promised AI discovered a growth signal. I put a meaningful slice of my retirement money into the strategy. For 6 months, it crushed the market. I felt smart. Then the model started losing when a macro shock hit. Why? The model relied on a single fragile signal that disappeared under stress. I lost a lot. That loss burned, literally kept me awake. From that pain, I learned the rule of thirds for survival. Diversify signals, diversify time frames, diversify risk controls. That rule saved my nest egg and became the backbone of every AI strategy I run now. That lesson cost me money. I'm giving it to you for free. Let me repeat something that matters. AI does not replace judgment. It enhances it. Now let's talk about why this works. Historically, only a small percentage of stocks account for most market gains. That's a fact. If you can systematically increase your odds of owning those winners, even slightly, your long-term results change dramatically. AI helps you tilt the odds, but only if you stay consistent. This is why I want you to stay until the end of this video, because the biggest danger isn't choosing the wrong stock, it's quitting the process when emotions kick in. The Bible also says, "Whoever is patient has great understanding, but one who is quick-tempered displays folly." Markets punish impatience. Now here's the third act. This is where everything comes together. Your goal is not to beat the market every month. Your goal is to build a repeatable process that gives you an edge over years. AI helps you test ideas before you risk money. It helps you see patterns instead of guessing. It helps you stay objective when emotions try to take control. Here is your simple Grandpa Leo checklist. 3 questions before every decision. First, does the data support this idea? Second, do multiple signals agree? Third, is my risk controlled? If the answer isn't yes to all 3, you wait. That's wisdom. Now let me talk to you directly. If you've stayed with me this long, I respect you. Attention is rare. Discipline is rarer. You're building something most people never do. Understanding. Listen closely, because this part is important. I'm about to give you one of the most powerful tools I've learned in this new era of investing. Not a stock tip, not a prediction, a prompting, a way of speaking to AI that forces it to think like a disciplined Wall Street professional instead of a guessing machine. I want you to understand something first. AI is not smart by default. It becomes smart when you tell it who it is and how it should think. That's the secret most people miss. So here's what I want you to say. Read it slowly. Copy it. Save it. Hello, chat. I want you to act as an expert Wall Street investor with a proven track record of beating the S&P 500 for 10 consecutive years. You specialize in long-term, data-driven investing, quantitative analysis, and strict risk management. You do not speculate. You do not chase hype. You base every conclusion on historical evidence and verifiable numbers. Your task is to identify stocks that have consistently outperformed the market over the last 5 to 10 years. Compare every stock directly to the S&P 500 total return. Rank them by consistency of outperformance, not just peak gains. Analyze revenue growth, earnings growth, free cash flow, return on invested capital, balance sheet strength, and long-term price momentum. Evaluate volatility, drawdowns, and downside risk. Exclude companies whose performance depended on one-time events, excessive leverage, or temporary excitement. For each stock, explain why it outperformed, what risks could cause it to fail, and under what conditions it should be avoided. Finish by identifying the common traits shared by market-beating stocks and outline a repeatable framework a disciplined investor could follow. Thank you. Now pause. Don't rush. That prompt alone can change how you invest. You're no longer asking AI to guess the future. You're asking it to analyze the past with discipline, which is the only honest way to prepare for the future. This is how adults invest. This is how professionals think. And this is how you stop gambling and start building something real. Use this wisely. Here is your simple Grandpa Leo checklist. 3 questions before every decision. First, does the data support this idea? Second, do multiple signals agree? Third, is my risk controlled? If the answer isn't yes to all 3, you wait. That's wisdom. If you've stayed with me this long, I respect you. Attention is rare. Discipline is rarer. You're building something most people never do. Understanding. Thank you for staying until the end of this video. It truly means something to me. If you want more lessons like this, practical, honest, grounded in experience, subscribe to the Millionaire Grandpa channel. This isn't about hype. It's about building a future you don't have to fear. Remember this, AI is a tool. Discipline is the edge. Patience is the multiplier. Take care of your capital. Take care of your mind. And I'll see you in the next video.